Who are the winners? Who are the losers here?
So in this bill, corporations will see a huge tax cut. They'll see their rate go from 35% down to 20%. Pass-through businesses, these are smaller business, could be startups or even mom and pop kind of shops. They also see a corporate rate, their tax rate cut, but it's a little bit more confusing. They get a certain percentage of their business profits at 25%, though they pay the rest at kind of their individual income rates. Companies that are really excited about this is you see tech excited as this moves towards a territorial system, which means that companies aren't taxed as much on their profits overseas. Apple being kind of one company known for keeping a lot of cash overseas. They can bring that cash back, though they still have to pay a tax on it, a 14% tax. The Senate bill has a lower version, so folks are looking to see if maybe that rate could come down as it goes forward. On the loser side, this is where things are a little bit up in the air. The House bill doesn't do this, but the Senate bill does, and it's something we're likely to see go forward, is that the individual rate cuts are temporary. So they only stay in place. They expire in 2026. That's the same for the pass-through businesses. So that could be your startups, mom and pop shops, any sort of law firm, accounting firm, usually organized that way. So people are watching to see, if there could be some extension there, though that's looking very difficult given the tight restrictions in the Senate for how much revenue this bill can lose.
Now, Alistair, we were talking earlier this week about a provision in this bill that would have not been good for startup employees. That is out. And generally, tech got pretty much everything they wanted.
Yeah, that's right. It was a good day so far. I mean, the Senate bill still has to be done, but it's a good day for tech. If you look at it, the big picture, it's great for big corporations, not so good for middle-class individuals. What are the biggest corporations nowadays? It's big tech companies. So that specific stock option thing, basically, they were going to tax stock options much earlier. It was going to be a big problem. Now, even there's a Senate bill thing that's in there now that basically will say that even based on the current system, you're going to get 7 more years to pay the tax rather than have to pay it up front. So that's a very nice win.
And we also saw some changes that are good for VCs, right?
Yeah, so there's a big debate about carried interest, which is a way to tax some of these investment funds and the gains on that. And basically, the new rule that's being proposed is it's a 3-year thing. You have to hold your investments for 3 years. VC funds hold them for 7 years or more, so it's great for VCs.
David, what's your take? I've been talking to a lot of tech executives who've been skeptical that tax reform is going to happen at all.
Well, it's funny because we used to hear about tax simplification, but that doesn't seem to be what's happening. However, if you're a big tech company, the combination of a lower corporate tax rate and the ability to repatriate profits held overseas at a dramatically lower rate than otherwise would have been the case is an amazing 1-2 punch, a positive one. So that is really good for big companies that are the wealthy ones already. Whether they really should be getting that kind of treatment given the way some of them are viewed right now is an interesting question. But certainly the win over option treatment is a really big deal for the entire innovation economy of the United States. I think if that, as proposed earlier, had gone through, we would have been in a crisis for entrepreneurs and startups in this country, as well as for established companies.